Hey YouTube, it's that time of the quarter where 13F filings come out from our favorite super investors that we like to follow. If you've been following me for a while, one of the super investors I liked following is Phil Town. I took his courses, seminars many years ago, and I just like to see what he does on a quarterly basis as a Rule 1 follower and a ruler myself as well. And the fourth quarter did not disappoint at all. He sold out of 3 positions entirely. He bought 3 new positions in the quarter, and he added to a current position as well. So we have a lot to get to in this video. And you'll want to stick around to the end of this video when I show you his full portfolio. This video is mostly just going into his buys and sells in the quarter. So the first stock that Phil Town purchased in the quarter is Nike stock. Most people know what Nike is. It's one of the best apparel companies out there, period. Mostly towards the sportswear type apparel and arena. Now, Nike has taken a pretty big dip over the last year. They're down almost 26% from a year ago. Now, it is not surprising that Phil Town bought this stock because one of his favorite investors that he follows is Bill Ackman, and Bill Ackman has been adding to his portfolio, namely in Nike stock and some other stocks as well, but Nike in particular. So in the past, Phil Town has followed Bill Ackman into position, so I'm not too surprised that he's getting into Nike. And we look at some of Nike's numbers over the last 10 years, it's hard to find another company that is as impressive as Nike. Over the last 10 years on average, they've averaged a 22% return on invested capital, which is phenomenal. Sales per share, earnings per share, free cash flow have all averaged about 7% per year, which is not amazing growth, but keep in mind this company is over $100 billion market cap, so that is fairly impressive as being as big as it is. Now, the reason why the company is traded at a really high multiple and the market has been willing to pay a higher premium for Nike is because they have little to no debt on their books. Their debt to equity is 85%. Their long-term debt payoff versus their free cash flow is 1.4 years. Their working capital is impressive with a 2.7 current ratio. And so it's definitely a very stable investment to be in, at least over the last 10 years. However, Nike has certainly come under fire over the last year with their stock price dropping 26%, mainly because of their overseas selling. In China, the Asian markets have fallen. And strictly, there's a lot of other companies like Lululemon have that got into their space and eaten some of their market share. Nonetheless, the company is still on solid ground with a gross margin of 44% and averaging roughly 13% operating margins over the last 10 years. Next company on the list that he bought is Lululemon, ticker symbol LULU. This was not a surprise that he bought into the company because he was selling put options in the last quarter. Not only that, but his daughter really loves the company. If you listen to some of his podcasts, it was very apparent that Phil Town and his daughter really liked the company overall. And with the stock price falling from about $450 a share a year ago, all the way down to less than $250 in the past quarter, it provided a very, very good opportunity to buy into the stock as the stock at that time was trading below 50% from its highs. I mentioned before that Nike had very impressive numbers, while Lululemon has even better numbers. Keep in mind that Lululemon is about a third of the size for Nike, so it is easier for them to grow than, say, like a Nike. But nonetheless, their numbers are incredibly impressive. So they're roughly about between a $40 and $50 billion market cap here today. Over the last 10 years, their sales per share, earnings per share, free cash flow per share have all grown in more than 20% per year, which is absolutely incredible. The return on invested capital has averaged 24%. They have very little debt on their books with a debt to equity ratio of 36%. Their gross margins have averaged 55%, and their operating margins have averaged 24%. So as good as Nike's numbers were, Lululemon is simply just better as far as their growth has been over the last 10 years and also how much their investors have returned or got a return on investment from buying their stock. And frankly, I got to say, this is probably one of the best 5 or 6 companies as far as numbers go that I have seen in the last year. So obviously with the stock trading around $250 about a quarter ago, Phil Town and his management team felt it was a good time to buy into the company. The next stock or position that Phil Town bought into is not an equity position, but is an ETF. It is the Van Eck ETF Trust, which is a gold miners stock, ticker symbol GDX. So it is not surprising that he bought into this type of fund in general. If you've been following him, he's been buying and selling gold and silver miners and also ETFs over the last few years. Some of it had to do with hedging the market because he believes it is so overvalued. But in general, if you look at how the commodity gold prices have been over the last year, they've actually gone up, where a lot of the gold miners and ETFs have not necessarily gone in correlation to those gold prices rising. So it could be a good opportunity to buy into something like that. For me personally, I typically don't buy into gold or silver or anything like that, but certainly Phil Town, that is some type of position that he is like to get into for hedging and other purposes. Now, the next stock on the list is not a new stock in his portfolio, but is one that he added to. In fact, he increased his position by 20% in the quarter, and now this is his second largest equity position in his portfolio, only after Netflix, and that is Occidental Petroleum, ticker symbol OXY. The stock is down roughly 17% over the last year. This is a company that Phil Town has been buying slowly into, has been selling put options. I'm sure that the put options were put to him during the quarter, and that's why his position has grown. Now, it is under 10% of his portfolio. In fact, it's at 7.34% at the end of the quarter. So it's certainly not a massive position in his portfolio like Netflix is. Netflix is over a 25% position currently in his portfolio. Occidental, not surprising that he added to it. Again, he'd been selling puts on it, but he's really following Warren Buffett into the stock. Warren Buffett, I think, owns around 30% of the total company. Like Occidental Petroleum, a lot of these oil and gas producers have been hurting over the last year. In 2023, a lot of them got to their highs, even into a little bit 2024, but since then, they have fallen off. What's interesting when I look into Occidental and really look into the crude prices on the forecast over the next year or so, there's a lot of analysts that believe that crude oil should be over $80 a barrel going into 2026. And if that is the case, Occidental looks like it's a good price or good value right now. What gives Occidental Petroleum an edge over their competitors is that they are primarily in the Permian Basin, and they can actually make money when a barrel of oil is all the way down to $40 a share, where their competitors, once it gets below $50, they don't make money. So Occidental can be more flexible in their future projects because they're more profitable than their competitors. And you really see that in their numbers with their gross margins being at 60%. So Phil Town, Warren Buffett, and others that are investing in the oil space, in particular oil producers, they must believe that crude oil should do well over the next year or two, especially under Trump's administration. So now let's talk about the stocks that he sold out of completely in the quarter, and we'll just go through these real quick. So the first one was not a surprise. It was Bank OZK, ticker symbol OZK. He has been in that stock for a long time, several years, and that is a bank that he absolutely loves. It's a regional bank, more in kind of the southeastern region of the United States. But he was really perturbed and really upset at the CEO, who's the founder of the bank, going all the way back to the 70s. In an earnings call, I think it was 2 calls before, where he said a couple things in that earnings call that just really made Phil Town upset, to a point where he said, I just can't be invested in this company anymore. So he sold a big chunk last quarter, and he sold the rest of it in Q4. So not surprising that he got out of that one. The second one he got out of was Capri Holdings. That wasn't too much of a surprise because it seemed like a lot of investors that were getting in there, including Phil Town, were kind of looking at this acquisition that Capri Holdings was going to be acquired by another company. And so based on that information, it looked like it was trading at a low valuation. This is a company, I think, that owns like Michael Kors and a bunch of other really high-end brands. And Capri Holdings has just been on a free fall. I mean, I don't even know They're down maybe 80% plus from their highs. And so he decided to get out of that one completely. And the third one that he got out of, that he's been in a long time, and he's kind of got in and out of this one, is Sturm and Ruger. So that's a company that produces like firearms and some other stuff. So again, I think he must think it's like maybe at too high a value. I don't know, but he's been kind of getting in and out of that one in general from that standpoint. Another interesting thing about his portfolio for the fourth quarter is that he's been growing his cash position. So he's always had a pretty large cash position, about a third of his portfolio. It got all the way down to, I think, 23 or 24% at one point, which is still a huge chunk of cash sitting around. But it's grown all the way up to about 44% of his portfolio. And Warren Buffett has been growing his cash position as well. Phil Town has been very open about believing that the market is overvalued. So he must be getting ready for kind of a rainy day when everything falls. He's been certainly hedging against the market, selling different option contracts that are hedging against the market, including betting against the S&P 500 and also the QQQ, which have not gone well for him in general. So that's his portfolio in a nutshell for the fourth quarter. I'm going to throw up on the screen now what his portfolio looks like at the end of the quarter. So you can take a look at it now. You can see that his biggest position is cash, obviously. Second largest is Netflix and Occidental, Sprouts, Alphabet, Howard Hughes, Nike, Vanek Gold Miners ETF, Lululemon, and then also has Ulta Beauty. So if you're new into investing, maybe you're fascinated or wanting to know more about how to invest, how to value companies in general, I do show you on my Patreon how to do that. I provide a couple of valuation models. I go through explaining how to use them so you can value companies yourself. I also give you access to my Discord with a bunch of other value investors as well in there. I think there's over 100 at this point that are on there. And we talk about, positions we might be looking into, companies. We talk about super investors. So if you're interested in something like that, go check out my Patreon down below and the link. Thank you guys for watching. Really, really appreciate it. I'll catch you on the other side. Take care and God bless.